Welcome to another Your Money Matters podcast, where it takes 1 second to start your financial journey, and I help you with 10,000 little wins it takes to get to your goal. I am Bruce Breedlove, your host for the Your Money Matters podcast. Thank you so much for being here with us. I am so glad to have you. So last week, we talked about FOMO and opportunity cost. That episode was about the things that get in your way in your pursuit of your financial goals. So now that we've talked about some roadblocks you can possibly hit on your journey, let's talk about how to actually get to these money goals that we have set for ourselves. So everybody's money goal is different, to pay off debt, to invest, to build wealth, to buy a house, to save for their next car. This episode is about a concept I call E.S.I, earning, saving, and investing. So what's cool about this topic is that no matter what your money goal is, and it could change over time, you meet this goal, you move on to your next goal. No matter what your money goal is, this concept of E.S.I, earning, saving, and investing, is the nuts and bolts of what is going to get you to that financial goal, whatever it is. So I'm going to go over each concept, earning, saving, and investing, and how it helps you further your money goals. But for the purpose of this podcast, we're going to use an example of someone who is debt-free, with the exception of their house. Let's say they have a mortgage. And we're going to use E.S.I to prove that these are the three core concepts that you can use, either one, two, or all three of them at the same time, to further your money goal and to build your net worth. Also, for the purposes of this podcast, let's go over what net worth means again. So your net worth is determined by taking what you own. Now that is anything that has intrinsic monetary value. You take what you own and you subtract what you owe. Okay, so these are debts or liabilities that you have that take away from your net worth. So let's just say someone has $100,000 in assets and they have a $30,000 car loan. Well, their net worth would be $100,000 minus $30,000, leaving a net worth of $70,000. So that's how net worth works. Now, how to actually calculate net worth is a little bit dynamic because it takes some skill to actually say how much things are worth. So, we can go to Kelley Blue Book and say, well, your car is worth this much, or you would need a realtor to come in and say, well, your house is worth this much on the market based on this comp and this and that. But net worth is for another podcast episode. But for this purpose, I wanted to redefine that because I'm going to be using that a lot. The purpose of E.S.I is to raise your net worth. So the reason why I'm dedicating an entire podcast episode talking about E.S.I is because I talk a lot about increasing your net worth, meeting your money goals, reducing debt, but not as much about physically how to do it. So E.S.I, earning, saving, and investing, are the three categories of tasks or things that you can do to increase your net worth. Everything we're going to talk about today fits into one of these categories. And again, you can focus on the earning or focus on the saving or focus on the investing or focus on them all. But it's important to see the differences between the three and how they work together. And you'll be able to incorporate that in your day-to-day budgeting and money decisions in order to meet these money goals that we have set for ourselves. Okay, so first up is earning. Okay, so earning is talking about what you bring in. So this is income. Okay, so the first of the three categories of E.S.I is earning. Okay, so in preparation for this podcast, I wanted to look at the average wage of U.S. workers as of 2017 this year. So the average U.S. worker across all age groups, males, females, the average is $51,272 a year. So the question here is, if you're above average or below average is irrelevant, but if you're looking to increase your net worth, and you want to earn more, how do you go about earning more? You can't just magically say, hey, I want to earn more. So I'm going to go through some things that you can actually do to increase the amount you bring home. So you're going to work every day. You're the average U.S. worker making $51,272 a year, and you want to make more. So the first option to earn more is to work more, okay? Work extra hours, stay late, work on the weekends. Now, this may be easier for some people. Like myself, I'm a registered nurse. I work 3 12-hour shifts a week, so I could work 7 days a week if I wanted to. I mean, it would take a huge physical toll, but the ability in my line of work, the opportunity for overtime is very well known, and it's very plentiful. So for those people working in an office or working 9 to 5, 40 hours a week, there is less opportunity to just go in and work extra. So it really depends on your industry. It depends on how your job is structured. It depends on your hours of the week. If you're able to just say, hey, I want to pick up overtime, or hey, I want to stay late. But that is the easiest way, because you already have a job. They're already paying you. Is to go in, bust your butt, make some overtime, and work more. So that is the first way to earn more. The other option for those people who don't find it very easy to get overtime at their jobs is to pick up a second job. Okay, so now this gets a little bit hairy, because those 9 to 5ers, you're picking up a second job and you're working late and you're taxing your body, you're getting less sleep. So you really have to look at how productive you're being with this second job, and if working more is actually beneficial to you. So you may be bringing home more, but what are you trading? What's the opportunity cost for this time you're spending working this second job? Is it truly worth it? How to earn more? You can work more. Now, next, so you can develop a side hustle. So this is kind of like a second job, but there's a lot of talk these days about a side hustle. So what is really a side hustle? And I couldn't really find a good, solid definition on what a side hustle is, but I'm going to talk about a couple things. Big these days is the sharing economy. So talk about sharing economy, you think about Uber or Airbnb, or ways to sell your time or things you already have, like your house, to make extra money, kind of almost passively. I mean, Uber requires some work, but Airbnb, you're gone, you sell your house for the day or weekend or whatever, and make some money. So that to me is a side hustle. But it could also mean, starting a business or creating a passive income stream. So, making high quality videos for YouTube and advertising on them, making a podcast like the one you're listening to now. So a side hustle is kind of like a second job, but it's kind of a dynamic subject, because there's really not a solid definition for it. And really what I would suggest, if you're trying to develop a side hustle, that you start looking into using a skill that makes you unique and sets you apart, that you already have and that you can develop. Okay, so for me, I was able, luckily at a young age, to kind of figure money out, and I started helping people with it, just kind of on the side and in conversation. And after a long time thinking about it, I really thought I can do this on a larger scale. I can help more people, because I'm already doing it now. But if I can do this in a way that can do some good, and also maybe someday be monetized through YouTube and sponsoring this podcast, that is a side hustle. So a side hustle is going to be different for everybody, because everybody has different skills. But if you're trying to develop it, I would start with what your interests are, what your passion is, and what you're good at, because that is much easier to develop some sort of side hustle career than learning a complete new skill, because you find where you're an expert. Where are you an expert? What are you an expert in? And does that knowledge and experience, is that valuable to someone? And if it is, maybe that's an opportunity for you to start a side hustle and start making some passive income or some extra income to supplement what you're already making at your job. So that's number 2, develop a side hustle. Now, number 3, which is a little bit more difficult for some. The third way to earn more is to ask for a raise. So you have a job, you're making $51,272 a year, and you really feel like the best way to earn more, or one option to earn more, would be to ask for a raise. Now, asking for a raise, I think, can be scary. because you're walking into your boss's office, you're walking into HR, you're walking into your manager's office demanding they pay you more money. So in my experience, and I have asked for raises before, and I've done it well, and I haven't done it well. And I've learned, and I've also read, and I've talked to people that have done it. The first thing you should do before you even think about asking for a raise is to do some market research. Whatever field you're in, whatever exact job you do at the company you do it, do some market research. Glassdoor.com, salary.com. There are a lot of websites out there where you can do market research based on your career, your specific position, your demographic, your amount of experience, and you can see, and even in your geographical area, you can see what people earn doing the job that you're doing. So, if at $51,272, you are being underpaid based on the average for your position or your profession, then that information is really strong to be armed with. It's really a good idea to be armed with that when you're going in to ask for a raise. So if you can prove based on the market research that you've done that you are underpaid, that is a really good start for asking for a raise. So of course, if you're going off of the average of what someone is paid doing your exact position in your city with your level of experience, and you are a overperformer, that's great. That's also another thing that you can come in armed with. Now, how do you prove that you're an overperformer? Maybe we all think we are. I would encourage you to refer to your previous evaluations, the previous meetings that you've had with your manager. I'm sure they're written down. I'm sure they're documented. And if they've given you exemplary marks in some or all of your areas of work, that is really good information to be armed with also to go in and ask for a raise. You can refer. When you reviewed me, you told me that my work is stellar. So I'm earning the average wage that someone doing my job earns. If I'm above average, then that is one of the reasons why I think that I could make more doing this job. Now, so we talked about market research. We talked about your performance. But there's a really important concept that you have to discuss and you have to think about when you're asking for a raise. So the reason we're employees at a company is because we're doing a job for them. Obviously, that sounds pretty simple, but what will set you apart in your workplace is when you get focused on how to add value to the company. What are you doing or what are you adding to the company that no one else? Make yourself irreplaceable. So if you can explain in monetary terms how you add value to the company, your sales were $3 million in the last year. You have decreased waste and accountability in the office to the tune of this amount of money. When you can get specific figures to support how you add value and why you are irreplaceable in your job, that is an excellent way to approach the conversation of asking for a raise. So do your market research, talk about your performance, and explain in detail, very specifically, how you add value to your position. So that's earning. Let me summarize. To earn more, you work more, you develop a side hustle, or you ask for a raise. Now there's one other thing we can talk about earning, and you can sell some stuff. Now, what person in this country doesn't have some extra stuff laying around? Put your stuff up on the internet, put it on Craigslist, sell it on eBay. To earn more, you can sell the stuff that's just sitting around your house, taking up room, and make some more money. Get out there, look around your house, and see what you can sell, and you can supplement your earning by doing this as well. So, concept number 2 of E.S.I, saving. Along with savings, I'm going to talk about debt reduction in this category as well. So saving and debt reduction goes hand in hand, and they both fall under the saving category, and I'll explain why. What does it mean to save? So you have $100 and you save it. So is saving the lack of spending, or is spending the lack of saving? Either way you look at it, money only does one job. So the reason why saving is a part of E.S.I is because that $100 that you have that is not assigned to anything will increase your net worth by staying in your savings account or staying in your checking account. So for these purposes, saving increases your net worth. Now, there's a lot of people out there that would say putting $100 in a savings account is actually making it lose value because it's being eaten away by inflation and blah, 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 blah. Those people are exactly right. But there's another part of E.S.I that is all for making money, make more money for you, and that's the investing section. But saving can fall into a couple different categories. So you can save for routine expenses. So for instance, I know that we need a new roof here in the next 5 years. So we're taking money and saving it, putting it away, so that when the roof repair comes due, we don't have to finance the whole thing. We don't finance anything. We don't have to finance any of the roof because we have saved in order to pay for that roof. And the roof, when it's on, will add value to our house. So that has now become a part of our net worth because this money that we have saved is now in our roof. So routine savings for big items is called a sinking fund. Okay, so we know that we need new brakes every 5 years, okay, for a car. So a sinking fund, the purpose of it is that you figure out the total cost of this big transaction, figure out how many years until you need to pay for it, so 4 to 5 years, and you divide by month and figure out how much you have to save per month to be able to pay for that item. So that is a sinking fund. So in a year, you need $5,000. You do 5,000 divided by 12, and that's how much you have to save every month in order to pay for that item in cash. That's one route savings can go, is to save and to pay for big items. So another route it can go is debt reduction. So I talked earlier that our example for this podcast is going to be someone that does not have any consumer debt. But the reason debt reduction is inside the savings category is because let's take that same $100 bill, okay, and instead of spending it, okay, we saved it. Now, if we have debt, we don't save above and beyond our emergency fund, okay, because we need to get rid of this horrible negative compound interest that's weighing down on us on these car debts and on these credit cards and on these student loans. It kills your wealth building ability to keep this debt around and to keep playing with debt. So we take this $100, okay, and we put it on a debt that would have otherwise been a negative 100 on our net worth. So we're now making that to zero, therefore increasing our net worth by $100. Okay, so if you had taken that 100 and spent it, that negative 100 on the debt would have still been there. So that is why debt reduction kind of fits into that saving category, even though we don't really think of it as a traditional saving activity. Another part of saving is just spending less. A form of saving is actually spending less, and I'll explain why. So I have this concept I call margin of living. Okay, so the top line is how much you make, okay, and the line below it is how much you spend. So the farther away those two lines are, okay, the greater your margin of living. Okay, so the distance between those lines, the difference between how much you make and how much you spend, the difference between those two values is the money in your budget every single month that you use to further your money goals. Okay, so someone making $1 million a year that spends $1 million a year has no more than someone who makes $10,000 a year and spends $10,000 a year. So that same person that makes $1 million, they only spend $100,000. They have a $900,000 margin of living. Okay, they use that $900,000 for furthering money goals because you've already taken out your expenses of $100,000. So that margin of living is the distance between how much you make and how much you spend. So a form of saving is spending less because you're increasing that margin of living and giving yourself greater number of dollars to deal with on a monthly basis to further your money goals. Okay, so if you're in debt, you use that margin of living to reduce debt. If you want to invest, you use that money in the margin of living to invest. So that's saving. Debt reduction, routine savings, and spending less, working on that margin of living. So we have earning and we have saving. And the last concept of E.S.I is investing, okay? So investing is an entire episode of the Your Money Matters podcast in the future. But for the purposes today, we're going to talk about investing as a way to increase your net worth and to further your money goals. So investing doesn't have to entail money or entail the stock market. So to invest is to spend a resource, okay, in a certain way in which you expect to get a return. Okay, so the first way to invest and to increase your net worth would be to invest in yourself. Okay, so invest in your own health. Okay, investing in your own health is beneficial because those of us that are healthy have less of a drag on our expenses due to medical bills and prescriptions, etc. Investing in your health by eating the right food and by exercising, getting a gym membership is always an investment that you will see a positive return on investment. Okay, so the other way to invest in yourself is through education. Okay, now, not all education is created equal, nor do I think that you need to go to get a college degree to make more, because there are certainly plenty of college degrees that do not have a reliable return on investment. Be careful when you are investing in yourself in the form of education. You really look at that return on investment. What is the job market for the degree that you're getting? What is the average wage? Is it below the average wage of the country? Before you prepare to spend time and money, your valuable resources on education, really calculate how reliable that return on investment for that education is. Next up in investing, my very favorite, investing for retirement savings. Again, investing is a whole nother episode, but traditional retirement savings methods are using a Roth IRA and a workplace 401k or 403b plan. They're the same thing. These investment dollars go toward the far future. Now, some of us are closer than others, but the purpose of these retirement dollars are not for anything except to build long-term wealth for that when we are financially free. Okay. Retirement is a financial number, not an age. We always think, well, how old are you going to be when you retire? We think about aging out of the workforce as a method of retirement. That is not true. The method of retirement is having enough money, having enough net worth, having enough wealth that your money creates enough income and will pay you forever, and it will last to generations to come. Again, a whole nother episode, but that is the way you invest for retirement is inside those accounts. Roth IRA and 401k or 403b, they're the same thing. We can invest for shorter term goals outside of retirement, and that is done through a non-retirement type account called a taxable brokerage account. So these are accounts that are associated with financial firms like Vanguard, Fidelity, etc., that you use to invest in companies or invest in mutual funds, ETFs, etc. These will hopefully grow in value, and all investing carries risks. There's no guaranteed returns, but the way these increase in value is because of capital gain. So a capital gain is when you buy a share of a stock for $100 and it goes up to $110. So that is a capital gain of $10. That same company has now had its earnings report and decided that it needs to pay its shareholders back for owning the stock and giving them the money to grow their company. So dividends are paid out, usually on a quarterly basis to the shareholders. So that is another way that the balance of your investment grows. So capital gains and dividends. Again, this is not a guaranteed thing that these will go up in value, but we use E.S.I to increase our net worth, and the long-term track record of the stock market has shown that it always goes up. In the near term, not so much, but over the long term, the market has always increased in value. There are other ways to invest. Peer-to-peer lending, when you lend money to other people through a website. LendingTree is one. And that is a more risky method of investing, and it carries a variable rate of return, but for substantially more risk. So that is not something that I personally dabble in. If someone listening has any experience, I would love to hear your experience and to have you reach out. Another way to invest, and it certainly fits under E.S.I, the investing section, is to own real estate. Owning your own home is an investment, and that is a way to increase your net worth because generally homes over time increase in value. So it is a form of an investment. Real estate can be primary residence, or you can own other homes as rental properties, but both ways are a form of investing. So, ladies and gentlemen, that is E.S.I. I really think that I've given you a lot of potent ways to apply this concept of E.S.I. to your daily financial decisions that you make. If you are looking into increasing your net worth, which everybody should be, E.S.I. is the method that you should use to do so. Everything that you can do to increase your net worth fits somewhere under these categories: E, S, or I: earning, saving, or investing. The beauty of E.S.I. is that they work independently of each other, but together they're even more of a dynamic way to increase your net worth and better your finances. If you go into work, ask for a raise, work more, and make more, and then you turn around and go budget and increase your margin of living even more by spending less, man, you will be well on your way to bettering your financial picture, no matter if you're buried in debt or if you're trying to invest and build wealth, save for a house, whatever. E.S.I. is the way to go. So guys, we've come to the end of another Your Money Matters podcast. Thank you so much. I had such a great time putting this together for you guys. I learned a lot about the concept, and I hope that this will help you make everyday financial decisions that much easier and that much better. Thanks again for listening, guys. Have an awesome week.